Hey there, ever hear people say things like, I bought some stocks, the market's up, or I'm investing in tech, and you're just sitting there thinking, what does that even mean? You're not the only one. A lot of people hear that stuff and just fake it. But today, we will understand what actually stock is, how it works, and why people throw their money into it hoping to make more. So, what is stock? A stock is a piece of ownership in a company. When you buy a stock, you're basically buying a small part of that business. If the company does well, your stock's value can go up. If it struggles, your stock can lose value. Now, each stock is made up of smaller pieces called shares. Think of it like a pizza. The whole pizza is the stock, and the individual slices are the shares. So if a company has 1,000 shares and you own 10, you own 10 out of 1,000 pieces of that company. And where do people actually buy and sell these shares? And the platforms where buy and sell stock, called stock exchanges. It's like an online marketplace for company ownership, where investors trade stocks of big-name companies like Apple, Netflix, and Amazon, hoping to buy when prices are low and sell when prices go up. Let's understand more with example. Maya, a sweet lady, she makes the best pizza in town and dreams of opening her own place called Maya Pizzeria. She needs $100,000 to get started, but she only has $50,000 saved up. Now she has two options: borrow the rest of the money from a bank or sell part of her business to raise the money. Maya decides to sell part of her business. She splits the restaurant into 10 equal parts, called shares. She keeps 5 shares for herself and sells the other 5 shares to people who believe in her idea. Jack, a pizza lover and big fan of Maya cooking, decides to invest. He buys 1 share for $10,000, which means Jack now owns 10% of Maya Pizzeria. If the restaurant becomes popular, opens new branches, and makes more money, Jack's share will be worth more. But if business slows down, his share could lose value too. And that's basically how buying stock works. You're putting your money into a company, hoping it grows, so your investment grows with it. After Maya Pizzeria gets popular, more people want to buy shares, so the price of each share goes up. Jack's $10,000 share could become worth $12,000. Big companies like Apple and Tesla work the same way, but with millions of shares. Stock prices rise and fall daily based on how well a company is doing. News, product launches, world events, or even rumors. When good things happen, more people buy, prices go up. When bad things happen, people sell, prices drop. That's why the stock market feels like a roller coaster. If you're thinking about investing, start simple. Pick companies you actually like and understand, like Jack loves Maya Pizza. Also, never put all your money in one place. Spread it out, so if one goes down, the others can help balance it. This is called diversifying, and it's one of the smartest things any beginner can do. And always be ready for some ups and downs. And that's it. Now you finally understand what a stock is. No finance degree required. If you'd like me to explain how IPOs work or why stock prices go up and down, drop a comment below. Hit like, subscribe. Thanks for watching.